Hello guys, it's great to have you here once again. Welcome back to RALLYTOP Investing 3.2 SMC Masterclass. Let's talk candle wick reversal. In this episode, I want to show you something that will blow your mind. Very simple and straightforward strategy that will amaze you when you put it into practice. You will find the result amazing. Only that you need to pay attention to me till the end of this video. Now, we are going to be talking about candle wicks. There is something magical about candle wicks on any time frame. Remember that this strategy can be used on any time frame. It can also be used on any asset class like the forex, indices, commodities, stocks, anything that you can talk about in the financial market. You can use it. Now, take a look at these diagrams. First of all, before we get to the diagrams, let me quickly run through the checklists that you need to stick to if you are going to be using this strategy to trade. Number one is that you need a clear market trend. A clear trend in the market. Is the market bullish or bearish? You need to identify that one clearly before you take any action. Number two, identify the candle whose wick takes out the previous candle's high or low depending on the direction of the market. I'm going to show you all of this on the live chart, but I just want you to have the idea first of all. Now, the number three nugget on this checklist is that the size of the candle wick must be at least 50% of its body. I'm saying 50% to be on the conservative side, but ideally it should be quite more than 50%. In fact, if you have 60 to 70% of the wick greater than the body, the better. Number four, mark out the lower half of the wick in the case of a bearish scenario, and vice versa, meaning that in the case of a bullish scenario, you will need to mark out the first half, the upper half of that candle wick. Once you have completed these four nuggets on our checklist, then you can navigate to the lower time frame to pull the trigger. Very simple, and I'm going to show you all of that. But if you are new to our channel, please consider subscribing and become part of the family. Hit the notification so that anytime we publish a new video, you can be notified about it. And if you are yet to join our free Telegram channel, please do so just immediately, because right there you have lots of value. You get lots of value in our Telegram channel. It's completely free. And if you are yet to become a member of my YouTube channel, please do so. How do you do that? Well, you need to go to the RALLYTOP Investing 3.0 YouTube channel. Once you get to that, our channel page, you will find the join button just beside the subscribe button. If you click on that join button, it will take you to another page. And right there, you will find the levels of membership that we have. We have 3 levels of membership. When you get there, you will find more details. So please be part of it, because you have lots of benefits if you join. Now, the reason for joining is because if you want to appreciate what we are doing here, the free content we are dishing out, you want to support me, then you can join and then pay monthly subscription. Okay? But what you will get at the end of the day is more than that, your monthly subscription. So you need to try that out. Okay, with that being said, let's go back to our discussion. So these are the nuggets on the checklist that you must strictly follow if you must make considerable profit using this strategy. Now, for instance, let me show you this. Look at this. See this candle here? This is known as hammer or shooting star. Now, take a look at the wick of this candle. It's far more than the body of this candle. This is perfect. This is the type of thing we are talking about. This candle is perfect. That's the type of thing we are talking about. The wick is greater than the body. Can you see that? It tells you a story. So it shows to you that price is about to go down. Now the second one, so this is correct. Okay? Now this is the second one. As you can see this wick, the wick is more than 50% of this body. Even though it has a lower tail, it does not really matter. As long as this upper wick is larger than the body, this is good to go. Okay? Now, this third one, look at it. This third one has a lower tail that is longer than this previous candle. But the upper wick is greater than the body. So this is also allowed. Now, get to this fourth one. Take a look at this fourth one. This wick, this candle wick, okay? Does it give 50% of this body? Certainly no. So this is a no-no. This one is a no-no. You don't want to use this one. Now, look at this other one. Is this the type of candle you want to use? No. Look at the upper wick. Far smaller when compared to the body of the candle. And look at the lower wick. The lower tail is greater than even the upper wick. So this as well is a no-no. Now, meanwhile, remember that these candles here, these are reversal candlesticks, which means price is most likely to start going down. And want to capitalize on that. I want you to understand that. The same thing with the bearish structure. I mean the bearish candles as you see here, not the bearish structure. The bearish candles. Take a look at the wick of this candle. When you look at the wick of this candle, you will realize that it is far more than 50% of the body in terms of size. This is a perfect candle that you want to see. Perfect for this strategy. This is known as hammer or shooting star. Okay? Now, take a look at this as well. The wick of this candle is more than 50% of the body, even though it has an upper tail. But the wick of this candle here is greater than the body. And so this is also right. Remember, this one was also right. Now, take a look at this third one. Even though it has a tail that is longer than this second candle, okay? But look at the lower wick. It is greater than the body. This is more than 50% of this body. So this is also allowed. This is correct. And now, look at this fourth one. This is a no-no because look at this candle wick, the upper wick. I mean, the lower wick is nothing compared to the size of the body. And it has a longer upper tail. So this is a no-no. Okay? The same thing with this one. Look at the down wick. Can you say this is 50% of this body? No. And it has a longer upper tail. So this one also is a no-no. I hope you understand what I'm trying to say. Now, the idea of what we want to use this strategy for is this one. Look at this. If you have a bullish candle, I want us to have a bullish candle here. I mean a bearish candle here. Okay. So you have a bearish candle. And then you have this wick like this. Okay. So, and then the next candle, which is supposed to be your bullish candle. Now, the next candle is a bullish candle, and it goes up. All right, let me change that color. So, and then you are expected to see this wick, this one. A wick must come to this lower parts. this week needs to come not more than these lower parts. The first, let me use the, look, your first 50% of this lower part is what you were targeting. This is where you enter your trade. This is your entry zone. This first half, the upper part of this first half. Okay? This is where you want to see this candle wick before price expands up. You want to see it come down into this 50%. If it comes down below this 50%, there is high chance that price is going to take out this low. I want you to understand that there is a high chance. Once it comes down below this 50%, this first half of this candle wick, then if it comes down below it, there is a high chance that price will continue to come and take out this low here. So you need to sit on your hands. Our entry zone is this upper half of this candle wick. So you are expected to see price coming down into this upper half before expanding upward. It's as simple as that. The same thing if it was a bearish scenario, just invert it. I hope you understand what I'm trying to say. I don't want this video to be too long. Let me take you to the live chart and show you some few examples, and then you can practice it on your own and you will be amazed at what you will see. So, first of all, this is the daily time frame. Okay, I said to you, the first nugget on the checklist is that you must determine the trend of the market. Is it bullish or bearish? As you can see, now this is the last high. This is higher high. Okay, before this new higher high here. Why is this a high, a valid high? Because it took out inducement and created a higher low here when it sponsored the move back up to take out this high with a candle closure. Okay, and then price continued to go higher and printed this new high. For this new high, it needs inducement, and here is that inducement taken out. Now price continued to come down. Now, remember, this is your last higher low before this higher high. So if price comes down to take it out with a candle closure, that will become a chalk. And as you can see, initially it took it out with a candle wick, but eventually price closed below this candle wick. Okay, now validating this as a proper change of character. So we have been converted from this bullish structure to bearish structure. Now, for this low to be confirmed, it needs inducement. And where is the inducement? Here is your inducement here, because we want to start going short now. So now inducement has been marked on the daily time frame. If you get to the 1 hour time frame, this is the leg that we want to see opportunities to use that strategy that I discussed with you about. All right, we want to use it on this leg. Let's see how many opportunities we can have here on this leg. Okay, now I'm talking about from this high downward. So let's get to the 1H time frame. Why we use the daily time frame is just to know the clear picture of the market. Is it bullish or bearish? Now we can identify that on the daily time frame we are just bearish. We are bearish, simple. And then we go to the 1H. On the 1H, we want to start looking for that pattern that I showed to you, whether we will have any opportunity from this high. Okay, I want you to understand that. Now, so look at this. Price has taken out this high. This high is taken out, as you can see. So this the smart money use this candle wick to clear the liquidity resting above this previous candle's high. And after that, price closed inside of this candle's range, this previous candle's range. That has to happen. Very important. Price has to take out the high of the previous candle with a candle wick, not with a candle body. And that candle wick must be at least 50% of the candle body. And as you can see, this is about 50% of this candle body. Okay, so this is proper. It has met all the conditions that we discussed about on our checklist. Now, what do you do now? You need to mark out the 50% of, the first half of this candle wick. That's going to be our entry zone. So I'm going to use the flip tool now to mark it from this low to this high. So that's our 50%. Okay, so this lower part here is where we want to target. Remember, we want to go short. Remember that one always. We want to sell because on the daily time frame, it shows to us that we are now bearish. So we want to sell. You don't want to buy, you want to sell. So even if you find this kind of thing here, you don't want to buy. Okay? So now, let's drop to the lower time frame. This is 1H now. We have identified it on the 1H. So we want to go to the 5M. So this is the 5M. What are we supposed to do on this 5M? Very simple. You just place your pending order here to go short. All right? Just place your pending order. Waiting for price to come and tap into it. And where is your stop loss? Stop loss just above. Simple. And where do you target? Well, you target the 1H low. Let's look at the target on the 1H, our TP. Let's see. So we can target this low here. We can target this low. So we go back to that 5M. So we have framed our trade now. So we are expecting price to take us to this low. And that will give us over 5R. That's decent if it goes our way. It's as simple as that. So let's play price and see what happens. Okay, in this case, price did not come to our zone before going down. So we didn't get any opportunity there to enter the market. So we go back to that 1H. Let's continue to play price and see whether we have any other thing to okay. We need to be careful. We are looking for something. Okay, we have gone too far. Look at this one. This is a perfect example of that candle pattern I showed to you. Price has taken out the high here. I said it is compulsory. It has to take out the high. So it cleared the liquidity resting above that high. And then eventually closed inside of this previous candle's range. It has to. Okay? And now, look at the size of this candle wick. You will realize that it is greater than the body. So this is perfect example of what we're talking about. And now, we want to use our FIB tool to mark out the 50%. So where is our 50%? From this low to this high. Simple. So this is our zone now. The lower half of this candle wick is our zone, our entry zone. So we want to go to the 5M now and see what is going to happen there. Now, when the next candle opens, remember, when the next candle opens, we want to see it tap into this zone so we can frame our trade from here to go short. So place your pending order and your stop loss just above this high. You can give a buffer. And where do we target? Let's see. The 1H. Let's get back to that 1H and see where we target. The first target will be this equal lows here, because after taking out this equal lows, price can start going up again. The second target will be here, and then the ultimate target will be here. So let's get back to that 5M and begin to play price and see what is going to happen. So here is our trade. When it gets here, once it takes it out, move your stop loss to break even and then begin to trail your stop. This is our ultimate target. Okay? So, and if it goes our way, it's going to give us 16R. That's crazy. Okay? We have been tapped into the market, as you can see here. This next candle tapped us into the market. Now, I want to go to the 1H to make it faster because of our time. So let's see what is going to happen on the 1H. Remember, here is our trade here on the 1H. This is the first zone, second zone, and the third zone. So we want to play price from there. Let's see. Okay, so first of all, let's do something here. We have another opportunity here. You need to be checking for opportunities, guys. We have another opportunity here on the 1H where we can add to this trade. Look at it. Look at this one. Very clear. It took out this previous candle's high. It took it out. Can you see that? And then after taking it out, price closed inside of this candle range. So, and look at the wick of this candle that we marked that took out the high of the previous candle is far greater than the body. This is perfect. This is what we want. And therefore, what we want to do now is to use our flip tool and mark out the first half of the upper part of that wick. That will become our zone to enter trade from. So let's get back to the 5M. Let's get back to the 5M. So when price opens, we want to take price from here. So we can frame our trade to go short here. Just place your pending order there. And then here is your TP. First of all, let's get back to that 1H and let me identify that the same place. I think it's the same place. Yes, here. This is where we are going to target. The same place. This one here. Once you take this one out, move your stop loss to break even. Okay? Because the market can do anything. And then you will remember your ultimate target is it this one or no? This one here. Please trail your stop. Don't just let it run like that. Trail your stop. Very important. Don't let your trade to run just like that because the market can do anything. So let's get back to the 1H and make it faster. The video is getting too long. So let's make it faster. Let's continue to advance price. Okay, so price is dropping massively in our favor. This is our ultimate target. Price nearly got to our ultimate target, but let's continue to advance price and see what happens. Okay, let's see. I'm trying to see whether we can add any position. No. So it has smashed our take profit. Okay, so look at the massive trade. We have two trades here running in our favor. Look at the massive trade. It's crazy. It's crazy, guys. Very simple strategy. You don't need to stress yourself. Simple. Just go straight to the point, and that's all. If this is your first time, please don't forget to subscribe and turn on the notification bell so that anytime we publish a new video, you'll be notified about it. Okay? And if you want to become part of our YouTube channel membership, please, you can do so the way I explained from the beginning of the video. All right, guys. Thanks for watching. I see you in our next educational video.